Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is the 24th. I can't believe this month is already over. Okay, let's do this. What we're going to talk about today, we have the futures we're going to talk about. We're going to go over economic data, and we're going to take some stock chart requests from our members. I only have a brief while to stay on today, so I don't have time to take a lot of requests. So I'm going to go with what members request, and before we get to it, I want to talk to you about no, can I be heard? It's okay now? Good. Okay. Thanks, Sam. Okay, so before we get to it, let's talk about our sponsors over at TrendSpider Automated Technical Analysis. Automate your grunt work, improve your accuracy, and time your trades with precision using their trade alerts, which I'll be going over today. Find winning chart setups with their scanners. And folks, it's loved by thousands. They have most every market exchange, crypto, etc. So take advantage of them. And by far, the number one thing that keeps me out of trouble is using a rules-based approach, using their alerts. If this, then that. Meaning, if an alert doesn't fire off, I'm not making the trade. The shares, especially in this rough market environment, need to come to us. If we chase this market in this weak market environment like we're seeing this morning, rallies tend to fade. Don't get suckered in. Use the alert system. They have a tour, demo, 7-day free trial offer. I give it away free to our silver and gold level members. Check it out. Let's get to it. Let's begin with economic data. Today is a big day. It's that time of the month where we get durable goods orders, and this is for February. Now, only a few days ago, you had the Fed chairman talking about how we're going to see economic growth well above 4.5%. Yet all the economic data that's come out of late has been a nightmare. Last Thursday, we had jobless claims that came out and beat to the wrong direction. I mean, it was just bad. I think the expectation was for about 730,000 in that ballpark. Actual, 770,000 new jobs lost. We have a bunch. Look at the schedule of Fed heads. All these people need to keep talking to jawbone this market higher. They need to do everything in their power. They don't stop. Why? Look at the schedule from yesterday. All they do is talk. Why? What are they going to convince us of? I thought we had 4.5% GDP growth coming at us. I haven't seen it. Tomorrow we get, what else besides initial jobless claims? More Fed heads out there, banksters. And on Friday, consumer spending, core inflation, consumer sentiment, a lot of economic data left to come out this week. So join us Thursday night for Thursday Night Stock Charts Live. Please use the link below. Get added to our email list. I want to begin with the dollar. Our shorts are doing well. Helped along by the stronger U.S. dollar. But the stronger U.S. dollar is acting as a weight on our precious metal trades, in particular gold miners, silver miners. But I think there's an opportunity to be had here. So what happened overnight? This is a 4-hour chart, U.S. dollar basket. And we continued up higher. This bar here, which opened up at 5 a.m., this is an inside bar. That means we may be seeing some stalling action here, no guarantees. So beware. If we do begin to roll over here, I'll be looking to see how gold behaves. It should be up. It is up. But it's off the highs of the session. We need a breakout here. Technically, we've already broken out, and we're holding support. But we need to finally get a continuation move up higher. Because that would be a buy signal for gold. Right now, all it's doing is consolidating gains, which is fine. Let's take a look at the VIX. That's not the VIX. This is the VIX. All right, so the VIX is down this morning, which leads us to believe the S&P 500 is trading higher. Here's the S&P 500. We saw some distribution yesterday. I went over with members last night that the stochastics, the slow stochastics on the Tues, on the XLK, which is the technology ETF, and on the S&P 500, was signaling a potential hookup. So it just made me wary. Members, if you haven't seen that video, it's posted in the members area. Or it's in your inbox, your email inbox. So we're looking for a continuation move lower on the S&P 500. We did go adding more to our short of the Trip Qs. Our short of the Russell 2000 did very well. First to the NASDAQ 100. And you can see here what happened is that we broke support. An alert fired off. We have since rallied back overnight. Now we're stalling out yet again. If we break to new daily lows, you can expect some algorithmic selling. And we'll be looking to lean in more to the short side. The Russell 2000. I think what we have here is a dead cat bounce. We are short of the Russell 2000. I have not added more yet. But this is typical of what we've been seeing of late, where we get a bounce and then we break. We closed out the day yesterday a little bit oversold on RSI, but I think we're heading lower here. The Dow, it bounced off the lower band of its rising uptrend channel. It held. The problem is this, is that you're seeing lower highs and lower lows. So the question is, do we hold this lower band of support or do we fade? So the jury's out here. I think ultimately that we break the support level and move to new lower lows. Maybe not today, maybe not tomorrow, but soon. We have earnings coming out soon, and they better be good. Oil, catching a bounce here. Expect a bounce in energy along with this today. Energy broke support yesterday, attempted a rally but was rejected. Oil very weak. Copper continues to consolidate here. Up over a third. Looking good. All right, let's check bonds. Bonds are the 800-pound gorilla in the room. And this rally that we've seen, again, folks, just joining in, this is a 4-hour chart. This rally that we've seen off of last Thursday's lows is coming under a bit of pressure. This is the 10-year Treasury note. So if this is pulling back off of its highs, that means that yields are beginning to catch a bid. They're beginning to creep up. But we're still up here on the morning. So like with anything else, do we break out or do we break down? Simple as that. And we trade in the appropriate direction. So we'll keep an eye on it. Pete, is there any way you can elaborate on PSLV or where I can do research? I just did research on it myself. I would go to Sprot's website, Pete. The difference between the PSLV and the SLV is that the PSLV, I believe they call it a closed-end fund, and they have the silver, right? SLV warns you. They may not have the silver. So if you check the prospectus of SLV, that was a big controversy about 4 weeks ago. Good morning, Paul. Sam, how are things over in Italy? How are things with COVID? Are you seeing a new strain, a new variant, or whatever they're talking about now? Nat gas never followed through to the upside. I was hoping for more here. All right, let's do chart requests, and I got to get moving this morning. Peloton for David. Oracle for David. And APT for Cena. Not much today. That's good. PTON. All right, so we spoke about PTON a few days ago. PTON remains above the 108 mark. Ideally, we close out the month above 117.58. Even if we close down, it would show a lot of strength if we were able to recapture that support level. Weekly chart. We continue to consolidate here, but here's my worry. Are we seeing a consolidation or a potential dead cat bounce where we were trading down, we've bounced, consolidated, now we're looking for a continuation move lower? I think you got to wait for the breakout on this, ideally above the 117.58 mark, and that would be a very, very bullish event, especially if we close out the week and month above that mark. Daily chart. Let's take the drawings off. We'll keep the automated trend lines on. All right, so the daily chart gives us a little bit of a place to negotiate this a little bit. We did break out and above, and this is the value of the automated trend lines. Click of a button. And there you go. We broke out and above 2 resistance levels yesterday, and we closed there. I think that this could be nibbled on. If you want to nibble on it with a stop loss right below yesterday's lows, I'd be fine with that. As long as we do not close back down below these 2 support levels, one in green, one in red, we have to maintain the support level. If we do not, and we break back down, we're probably going to take out these lows. So beware. RSI looking good. Higher lows. Good volume into the close is noted by the raindrop charts. Volume was okay yesterday. So the daily chart I'm a little bit more optimistic on. It's becoming constructive, whereas the weekly and monthly charts, they're waiting for direction. And the 117.58 mark, that is a very significant level. So keep an eye on it. Oracle. I haven't gone over this one in a long time. Very nice. We're seeing some pressure, but new higher highs on the month. We're trading above resistance in green. Weekly chart. Higher lows in RSI. All right, so making the call here. We need to hold 65.50 per share. I think this could be nibbled upon. Tight stop right below. If it fails, we're coming back down here to the low 60s. And I'd be looking to add to my position on a breakout above weekly resistance. We'll keep this active for a couple of weeks. Excuse me. Daily chart. Here's our weekly alert set. It's flirting with it, but we're not there yet. Right now, we remain in the trading range. I like it on a pullback. As a matter of fact, let's set the alert. If we come back into this neighborhood, it's an area to buy. Scratch the itch. Test the market. All right, so our alerts are set. We have one set here on a pullback and a retest of support, and another one set here on a breakout. And it goes back to what I was saying earlier, rules-based approach. If this, meaning if we break out, we open a position or add. If we pull back and retest support and it holds, we scratch the itch. We open up position, we test the market. No pressure on us. Let the stock prove itself, not us to it. APT. Daily chart's not looking good. I think this is one you're going to need to avoid. The storm clouds are lining up here. We broke support so far on the month. Looks as though we did it this week at 10.46 per share. So far in the week, we have a breakdown. Again, this is our second time in the past couple of weeks. We did so back here on the 8th, recaptured on the 15th, the week of the 15th. Now we're down below it again. Not good. Daily chart. We have broken support on a daily time frame. This is becoming a short. So I would avoid this. If you're looking to get long, I would avoid this. A lot of problems here. And we'll leave it off with Butterstacks, shop. Okay. Yeah, I would be careful of the short right now. We're going to come back to that daily chart. First, we'll go to the monthly chart. We're in no man's land right now on a monthly time frame. Weekly chart. We could be setting up for a head and shoulders setup. Left shoulder, head, right shoulder. We have broken out on the week. Let's view this in a different way. You're looking at it from a short perspective. So, were I a short or looking to short Shopify, all right, so we'll keep this active. I would also set up a tripwire alert here. It's not going to let me do it. Let's drill down to a daily chart. Let me see if they could let me do it there. Here. If we fail to hold this breakout, and we have broken out and retested on a daily time frame, so this is not my favorite short right now. But if you're looking for a trigger, watch for a failure to hold the support level and then a break below. I'll get a number in a moment. All right. So at current, we broke out. We did so on the 22nd. We pulled back, came very close to a retest yesterday. Right there, it's not a short. Too much strength here. So I would be looking for an alert to fire off warning me that we've broken at current what should act as support right here. Would I short right then and there? No. I'd be waiting for my weekly alert to fire off right here at around 1,099. Let's round it down. So if we close out the week below that mark, then I would begin to build on a short position. Not right now. I would wait. I would want to know whether or not this is a dead cat bounce, these past few weeks of buying, And if this is a head and shoulders setup, simply because it looks like one right now doesn't make it so ultimately. This head and shoulders setup can be negated by simply going up. So we only want to short on a head and shoulders setup on a break of the neckline. We're not there yet. So it really takes a lot of patience not to short this. Let the market tell you when it's appropriate to short it. That way you improve your risk reward. All right, folks. Everybody have a really great and profitable trading day. I need to cut this short today. Talk to you tomorrow morning and tomorrow night on Thursday Night Stock Charts Live. Till then, click the like button and be well.